Good afternoon, everyone.
Good
Good afternoon, sir.
afternoon, sir.
Good
Good
afternoon.
afternoon.
Okay, so we are here to revise one of the most important accounting standards in your SBR exam, which is IFRS 15. Arguably or inarguably, I would say the second most important area in your syllabus after consolidation. Consolidation always, of course, there's a compulsory question on consolidation, and you know that. But apart from that, one thing which people forget to mention is the fact that even revenue is tested in every exam in your SBR curriculum. हर पेपर में रेवेन्यू पे आपको कम से कम एक सवाल तो दिखेगा ही दिखेगा. एंड आई एम नॉट सेइंग इट हैज टू बी इन सेक्शन बी और एथिक्स और समवेयर. कहीं ना कहीं पूरे पेपर में रेवेन्यू पे क्वेश्चन होगा ही होगा. More important than financial instruments, more important than any other accounting standard is IFRS 15 revenue. Now, in our regular class, of course, we spend a lot of time initially in coming to terms with why was there a separate accounting standard required for revenue and what was the problem with the old accounting standard. Up right now, of course, we don't have time to discuss all of that. So let's first of all understand what is revenue and what is the meaning of revenue recognition? See, the term revenue is income, but not in any other income. It is income arising in the course of an entity's normal trading or operating activities. So, if I am an ACCA tutor, then the money I get from coaching ACCA students is my revenue. But the interest that I get on my FD is my interest income. It is not income in the course of an entity's normal trading or operating activities. Okay, so anything that you earn in the normal course of business is your revenue. And the term revenue recognition basically tries to answer one very important question. When exactly am I supposed to account for revenue? When am I supposed to record the entry? Bank account debit to sales or customer account debit to sales. So when exactly does sales get credited in your books of accounts? That is what IFRS 15 revenue from contract with customers tries to explain. Now, there could be cases where you have received money from a customer. Okay, customer ne paisa to de diya, but should you consider that amount as your revenue? Should you credit sales is a big question. Up when you join my batch, you pay 15,000 at the commencement of the batch. ठीक है. मेरा बैच शुरू हुआ आई थिंक 14th of June को. और 14th of June के पहले आप लोगों ने मुझे 15,000 रुपीज दे दिए थे. यू हैड गिवन मी 15,000 rupees before the batch started. But the question is, on that date, when you paid that amount to me, was I allowed or was I eligible to call that amount my revenue? The answer is, it depends upon whether I have completed my responsibility, I have completed my obligation under the contract. So the question is, मैंने आपसे 15,000 तो ले लिया, I took 15,000 from you, but have I fulfilled the promise that I made to you? What was my promise? My promise was to teach SBR. My promise was to share Excel notes. My promise was to give you flowcharts. My promise was to conduct mock. After I have completed my part of the deal, after only after then should I recognize that particular amount as revenue. अब जैसे मेरा syllabus खत्म हो गया, then I can recognize that 15,000 as revenue. So the process of revenue recognition, पूरा accounting standard is aimed towards one thing. When exactly should I credit sales in my books of accounts? The term recognition basically answers the question when. एक पर्टिकुलर ट्रांजैक्शन मैंने कब रिकॉर्ड करना है इन बुक्स ऑफ अकाउंट्स, दैट इज व्हाट द टर्म recognition tells me. Now, the revenue recognition activity has been split into 5 steps. Step 1 is identification of contract with the customer. What is a contract? You know that a contract is an agreement between two parties which is enforceable at law. What do you mean enforceable at law? The term enforceable at law means, give me 1 second. Is the voice lag still happening? Can you hear my voice clearly now, everyone? Or are you facing?
Yes, sir.
Okay. So step one, identify the contract. What is a contract? It is an agreement enforceable at law. As per IFRS 15, it is okay even if the contract is a verbal contract or it does not necessarily have to be in writing. A contract is something which can be established even through the operation of customary business practices. But in real life, you know that unless and until something is in writing, it is not correct to call it an agreement. It is not correct to call a contract. In real life, an oral promise doesn't really make sense. But of course, here we are going to study things from a theoretical standpoint. Step two is identify the separate performance obligations within a contract. Step two is basically what is a performance obligation? A performance obligation is a promise. What have you promised under the contract and what has the other party promised under the contract? That is step two, identify the separate performance obligations. Step three, determine transaction price. Transaction price is the amount agreed under the contract for providing a particular commodity or service. Step 4, allocate the transaction price to the performance obligations in the contract. So basically, the transaction price has to be split between the different promises made under the arrangement. We'll see what step 4 is later. And step 5 is the final step for which all of this effort is happening. At what point exactly do you say that revenue should be recognized? Okay, at what point can you credit sales in your books of accounts? So this entire exercise is aimed towards that activity. Okay, now step 1, identification of a contract. For that, we need to understand what is a contract. It is an agreement which is legally enforceable at law. When I say legally enforceable, it means if the other party fails to fulfill the contract, I can drag the other party to a court of law and uh, make them do the particular activity or make them perform the particular activity that they had promised. If I say this to Garvit, ki Garvit, after your paper, let's go for dinner. Okay, I make this comment and he says yes और वो पूरा तैयार होके बैठ गया and आपके ही लैंग्वेज में मैंने आपको घोस्ट कर दिया, right? So, Garvit, will you be angry with me? Yes, but can you drag me to a court of law? No, it was a promise made between friends. But if I give it to you in writing that, listen, anyone from my batch who gets an All India rank, that person will get a prize of 5,000 from me, and I promise it. And there is a give and take that is happening. It is signed on a stamp paper and that becomes enforceable because it is a legal arrangement between two parties that can be enforced in a court of law in very, very basic rudimentary terms. Now, an entity can only account for revenue if the contract meets the following criteria. The parties to the contract have approved the contract and are committed to perform their respective obligations. What do you mean by approved the contract? Your approval to a contract can stem only from signing the contract, right? So both the parties to the contract must have signed the agreement. Maybe, they have initialed on each page. And because they have signed the arrangement, now you can say that they are committed to perform their respective part of the promise. The entity can identify each party's rights regarding the goods and services to be transferred. What does the other party expect? So, if I perform my service and I teach you, I expect you to pay me 10,000 rupees. So, I can identify my right. You can identify your right. What is your right? Your right is expecting uh, the service of SBR coaching from me. The entity can identify the payment terms for the goods or services to be transferred. And see, identify payment terms means on what dates is the payment supposed to be made, how is the billing supposed to happen. All those terms should be very clearly defined, and the contract has commercial substance. What is commercial substance? Commercial substance means when the contract gets executed, the risk timing or amount of the reporting entity's future cash flows will change as a result of the contract. So the term commercial substance basically means that after I have performed my obligation, the contract between Himanshu and me is that I will teach him SBR. If the contract is I will teach him SBR, the contract has commercial substance. Why? Because after I deliver my service, Himanshu pays me 15,000. The amount of cash flows of Satyamed changes as a result of this contract, which means basically After I perform my obligation, I get my cash under the contract. Then I can say that the contract has commercial substance. And one very important point, it is probable that the entity will be entitled, that the entity will collect the cash, collect the consideration to which it is entitled in exchange for the goods or services transferred to the customer. To put it in simple terms, this clause means that the probability of collection is greater than the probability of not collecting. What do you mean by it is probable that the entity will collect the consideration? The probability of collection is greater than the probability of not collecting. Ab, when I say commercial substance, when I use the term commercial substance, A, it means that the nature, timing, or amount of cash flows will change, and it is probable, means the chance of collecting the amount from the customer is higher than the probability of not collecting. Okay, have a look at this example once where the probability of collection drops down, which is why you don't record the revenue amount. ठीक है, एक बार पढ़ो ये example. In this case, because of certain changes in the economic environment, the party is on the it is on the brink of bankruptcy, and it might not be able to pay the amount. So, जो amount collect करने का probability कम है, though that amount in whose case the probability of collection is less than 50%, this example relates to that. Have a quick look. Tell me once you have finished reading. Huh? Okay, cool. Let's move on to the next one. The second step in your journey is separate performance obligation. Now, what does the term performance obligation mean? Performance obligation means something that you have promised under the agreement. I have promised to teach you SBR. I walk into a restaurant, I place an order, and now it is their responsibility to serve the food that I have ordered. Or I order something on Blinkit. Now, what is their promise? Their promise is to deliver the goods to me within 10 minutes. What is the promise that I have to fulfill? I have to pay them. Performance obligation is something that has been promised under the contract. And what is promised here? To deliver goods or services to the customer. Now, in some cases, you could have multiple individual separate performance obligations, or you could have one single performance obligation. Say you want to construct a new bungalow for yourself or a new house for yourself. You get in touch with a you get in touch with a building contractor and you tell him, "Ki, listen, construct a house for me and these are the specifications." So what he does is he brings together sand and bricks and gravel and cement and thousands of other things. He puts them together and he constructs the house for you. Now, you know that if you go to the market, you can buy sand, you can buy stones, you can buy bricks, you can buy cement all individually. But the contract with the building construction contractor is such that you don't want him to You don't want this construction contractor to give you sand and bricks and cement. You want him to bring it together, and the promise is to construct the building. The promise is not to give you individual bricks and individual sand. You don't want to do that. That person is going to construct the entire building for you. That is a single performance obligation. But if I tell you, okay, listen, if you join my class, if you just join the coaching, the fees is 15,000. If you join coaching plus test series, the fees are 17,000. If you join coaching plus test series plus counseling, the fees are 20,000. Coaching is a separate promise. Test series is a separate promise, and counseling for career is a separate promise. All of these are separate promises made under the contract. Why? Because they are capable of being done individually also. You can come to me and you can buy just the coaching, or you can come to me and buy just the uh, counseling service or just the mock service. You don't have to buy everything from me. So this is what we understand by a separate performance obligation. And your job here would be to identify separate performance obligations under the contract. One topic on which they can ask you questions is about warranty and extended warranty. This is one of the special case transactions that have been given under IFRS 15. Warranty या extended warranty का there are two types that might be asked in the paper. One is your regular assurance type warranty. What is that? You go out and you buy a chair from a IKEA, or you buy a chair from one of the shops, and then they say, "Ki, listen, if anything happens to the chair in the upcoming 6 months, we will come and we'll replace it for you free of cost." So I'm the buyer and IKEA is the seller. IKEA makes a promise that, listen, Satyamit, if anything happens to the chair, if it breaks down or kuch bhi ho jata hai, we'll come and we'll replace it or repair it free of cost. Okay. IKEA knows that out of the 100 chairs that it sells every year, 5 chairs will have a defect. So what, and they know that if 5 chairs end up having a defect, then these customers will come back to me and ask for free repairs. So what I do is, when I sell the chairs, out of the 100 chairs that I have sold, I create a provision in my books of accounts for the repairs and maintenance cost that I will have to incur when these people come to me for getting a free repair of these chairs done. So I record an entry, warranty expense account debit, या repairs expense account debit to provision for repairs, या to provision for warranty. This is the entry I record. Now later, if out of the 100 chairs sold, instead of 5, only 4 chairs end up having a problem, then I repair the 4 chairs free of cost. That's an assurance type warranty. What is an assurance type warranty? It is a free warranty wherein you tell the other party that if you have purchased these goods from me, there is very little chance that anything will go wrong. But should anything go wrong with these goods, I will come and I will repair these goods free of cost. So you don't get any money for providing this service. It is just a free warranty or a free service that you are providing for attracting and retaining the customers. The second type of warranty is known as an extended warranty. And I'm sure everybody here has faced that at some point of time or the other when you purchased electronic goods and appliances. If you go to a shop and you buy an iPhone, the iPhone is for 80,000. Now the salesperson notices that you have finalized a model. He comes to you very smartly and says, listen, sir, on this you are getting 6 months of free warranty. Like, very happy, thank you. Then he comes to you and says, sir, but you know what? What if you spill coffee on the iPhone? What if you drop it from the first floor? What if your child spills water on the iPhone? Your entire phone will get destroyed, sir. And to repair it or to replace it, you will have to spend another 50,000 rupees. Why don't you do one thing? You pay us 3,000 rupees right now. If anything goes wrong with the iPhone, we will come and we will repair it for, if you pay us that 2,500, we are giving you some more extended time period within which the repairs and damages to your phone will be taken care of by us. The only thing is, sir, you have to pay us 3,000 rupees. Now, I am buying a phone of 80,000. My thought process will be, I am anyway wasting 80,000 rupees here. I'm spending 80,000 rupees here. But why not spend 3,000 extra? At least if anything happens to my phone in the next 1 year, I have someone who is going to come and do the repair replacement work for me. So I happily, willingly give away 3,000 to this person. in the seller's books of accounts, he will record an entry, bank account debit to advance from customer 3,000. Now this is a paid extended warranty for a period of 12 months, for example. Every month, see, his liability, his responsibility is getting extinguished every month. So at the end of every month, he will keep on recording 1/12 revenue. Okay. And by the end of 12 months, the entire cash collected would have been transferred to revenue over a time period of 12 months. This is an extended paid warranty. And when you have an extended slash paid warranty, the money that you receive should not be credited to P&L in one go. It should be basically bifurcated over the total duration for which the extended warranty is given to you. Okay. Now, a question like this can come in the paper specifically with respect to paid warranty. So just have a quick look at the explanation on your screen. I will increase the size if you want. Read it carefully. Tell me when you want me to scroll. I will quickly scroll. So, Garvit, Mayank, you remember I was saying there are certain special transactions in IFRS 15? This is one of them. Then the principal agent relationship is another one. Then that is consignment basis is another one. Then bill and hold is another one. So these are special transactions under IFRS 15. ठीक है. Okay. Chalo. Now read the extended or paid warranty. ठीक है. Just look at the example end to end. एक बार देख लो. Then of course we'll move to the next step. Cool. Are you all with me?
Yes, sir.
Yes, sir.
Perfect. Now, let's talk about transaction price. Transaction price is the amount promised under the contract. In my SBR batch contract, the promised amount is 15,000. That is the transaction price. If you are going to some institute and buying the entire 13 papers package and say you are paying 2 lakh rupees for that, that is the transaction price. Now, the third step is determining the amount of this transaction price, and there are certain basic rules that you need to keep in mind. For example, if you are a GST registered business or if you are a VAT registered business, you sell the goods to a customer for 2 lakh rupees, and on that amount, you collect 36,000 rupees. So the accounting entry will be bank account debit to revenue. See, how much did you collect from the customer? You collected 2,36,000 from the customer. But that 36,000 is 18% GST, which you are not allowed to keep. You have to go and deposit that with the government. So that amount is not included in revenue, and you will credit GST payable account and you will credit revenue with 20,000. Okay, so when determining the transaction price, an entity shall consider the effects of there are four separate items whose effect you have to consider. But the first rule that you should keep in mind is amounts collected on behalf of third parties are excluded, which means even if you are acting as an agent of someone, you sell goods on behalf of someone. Okay, you sell goods on behalf of someone, that amount you cannot include in your revenue. It belongs to someone else. You are only acting as a collection agent. We'll see that when we go deeper into an understanding of uh, these aspects where we discuss principal and agent relationship. Now, apart from that, whenever you are determining the transaction price, there are 4 points that you need to keep in mind. What are these 4 points? Actually, there are more. अपने syllabus में 4 है. There is A, variable consideration. There is B, significant financing component. Then there is non-cash consideration, and you have consideration payable to customer. Now, what is variable consideration? Variable consideration is something that will change over a period of time, something that is not fixed at this point in time, but an additional amount might be paid to you when certain conditions are fulfilled. For example, I enter into a contract with Garvit that listen Garvit, मेरे बैच का फी है 15,000, लेकिन अगर मेरे साथ पढ़ के you get a global rank, then you have to pay me additional 5,000. The 15,000 that I charge from him for the SBR batch, that is fixed consideration. The additional 5,000 that I have told you, listen, Garvit, if you get a rank, you have to give me that amount additionally over and above the 15,000. The that consideration is considered variable consideration. Variable doesn't mean that the amount is changing. Huh? Variable could mean that the amount is changing, but variable also means that, see, right now you are not sure whether you will get that amount or not. And why is it variable? Because if Garvit doesn't get a merit, I get 0 rupees. If Garvit gets a merit, then I get 5,000 rupees from him. Okay. So whenever we talk about variable consideration, this is something whose receipt is not fixed, which is why we consider it to be variable consideration. Now, when we talk about, once we have understood what variable consideration is, uh, we'll have to go deeper into understanding when to record the variable consideration. Okay, what does the rule in IFRS 15 specifically tell you? The rule says if a contract includes variable consideration, the entity must estimate the amount that it will be entitled to. Okay, IFRS 15 says that this estimate can only be included in the transaction price if it is highly probable that a significant reversal in cumulative revenue recognized will not occur. It is highly probable that a significant reversal in the amount of cumulative revenue recognized will not occur when the uncertainty is resolved. Now, let me give you an example. I signed up with Plutus Education, and Plutus has promised to pay me 2 lakh rupees for the SBR batch. I'm like, fine, 2 lakh rupees is a fair amount. But I tell them, listen, I can tell you with conviction, I can guarantee you that the pass rate in your SBR batch will be 70,000. And then I say, okay, because I can get you such good pass rates, I want you to pay me an additional 25,000 when it is proven to you that the actual pass rate is more than 70%. Plutus agrees to the idea that if the pass rate in your batch exceeds 70%, we will give you additional 25,000. Now, think from Plutus Education's point of view and think from my point of view. Here, I am the one charging fees to the institute, so let's think from my point of view. See, if I were a new faculty, okay, who is teaching SBR for the first time, what I would, I really don't know how much result can I deliver because I have no past yardstick or past experience on which I can base my opinion. So I'm not sure whether I will get a 70% plus result or not. I might get 100% also, I might get 50% also. So I don't know. how much result will I get? Now, on the result date, on what, 14th, 15th of October, when the results come out, it gets proven on that date that the result is 60%, which is less than the committed number of 70. Now, since the result is less than 60%, sorry, is less than 70%, I'm not going to get that additional 25,000 bonus from Plutus Education. So when the uncertainty is resolved, understand, when is the uncertainty resolved? Uncertainty is resolved on the date on which the results are declared. Results are declared on 15th of October. Now assume that I was overconfident. I thought, oh, I know everything and I will be able to get these many results. So what I did was, instead of recording a revenue of 2 lakh, I ended up recording a revenue of 2,25,000. Customer account debit to revenue account 2,25,000. Now, what happened on 15th of October is that this amount was proven wrong. This past percentage was proven wrong. I had told them that, listen, I will deliver more than 70 and then you have to pay me 25,000. I actually delivered only 60. So now Plutus is not obligated to pay me anything. But I have recorded that revenue in my books of accounts, customer account debit to revenue account, 2,25,000. Now, when the result is declared and the uncertainty is resolved, what will happen? The 2,25,000 that I have credited to revenue, out of that 25,000 will have to get reversed, which means there is a, what happens is there is a reversal of revenue already recorded that is happening. And this was the first situation when I was an inexperienced faculty. Think of another case when I am a more experienced faculty. Okay, now if I am a more experienced faculty, I go and tell Plutus Education ki, listen, this is my 12th batch of SBR, and after that I am guaranteeing you that you will get a minimum 70% result. Think from my point of view. When I'm promising a 70% result to Plutus Education, I'm not saying that out of overconfidence, or I'm not pulling that number out of thin air. I have done so many batches of SBR, which is why I know that if I am promising this, I will end up delivering that. So what I do is I record a revenue of 2,25,000. Customer account debit to revenue account. On 15th of October, the results come out. Now, in this situation, the results are more than 70%. And me being an experienced faculty, I was able to predict the outcome. So when the uncertainty around this event got resolved on 15th of October, did I have to reverse my revenue? No, I did not have to reverse the revenue already recognized. I was able to deliver on the 70% promise. So what is the basic principle that we are trying to say? What we are trying to say is, if you recognize the revenue and on the date the uncertainty gets resolved, there is a high probability that you will have to end up reversing the revenue recognized. In such a case, don't record the revenue. So the first faculty should not record the revenue, because there is a possibility, there is a high possibility that on the date the revenue gets, when the uncertainty gets resolved, there is a probability that the amount of revenue already recognized will have to get reversed. Okay, second situation. Satyamed, the faculty, knew the outcome of his batch because he was an experienced faculty. So on the date the revenue, so on the date the uncertainty gets resolved, there is a high possibility that I will not have to reverse the revenue already recognized. In case 2, I should record the variable consideration in my books of accounts. In the first case, the faculty should not record the variable consideration in books of accounts, and it comes from this specific line, where it is highly probable that a significant reversal in the amount of cumulative revenue recognized will not occur when the uncertainty is resolved, then I should include that variable consideration in my transaction price, where there is a high chance कि आज तो मैंने recognize कर लिया, I recognize the amount as revenue today, and then there is a high chance that it will end up getting reversed tomorrow. आज record हो जाएगा, there will be a reversal in the future. If I know that this is going to happen, then I should not include the amount of 25,000 in my revenue. So IFRS 15 ka provision is very simple. If you believe that there is a high chance of revenue getting reversed in the future, then don't include it in the transaction price. Don't consider. But if the chance of that amount getting reversed in the future is bleak, okay, you don't think that you will have to reverse the amount already recognized, then you can go ahead and record the revenue in your books of accounts. ठीक है? अब do one thing. This point that I have discussed now, I have laid it down here for you to read. Just go through this once, go through situation one first. Tell me when you want me to scroll, okay?
Sir, you can scroll.
Sure.
Sir, done.
Sure. Look at situation two. I'll just have a quick glass of water and come back. Just give me one moment. Okay. Then you could have a situation where the goods are sold with a right to return. If the goods are sold with a right to return, then the consideration is variable. Why is the consideration variable? I sold 50 units to you, and I know that on the basis of my past track record, when 50 units are sold, on an average, 4 units are returned, which means the promised consideration is for 50 units, but consideration with respect to 4 units can get reversed, which is why in a right to return situation, the business entity should create a refund, should create a provision for refund in case out of 50, those 4 units are returned. So you should not consider that amount as revenue. When you sell goods worth 50,000 and you know that 4,000, the goods worth 4,000 might be returned and then you will have to reverse the revenue. IFRS 15 tries to be extra cautious and it says ki dekho, if there is material uncertainty over collection of that amount, then don't, or there is a there is a certainty that you will have to return the amount to the customer, then specifically make sure that you don't consider that as revenue. So in this case, while you get 50,000 from the customer, you will record an entry bank account debit 50,000 to sales account 46,000 to liability to provision for refund 4,000. If after the return period is over, nobody comes and returns the goods, then ये जो आपने refund का provision create किया था, debit provision for refund account, and transfer that amount to your revenue account. That is one thing about IFRS 15 that we have to, honestly give a lot of credit for, which is that IFRS 15 specifically focuses a lot on prudence more than any other standard. Basically, revenue is one area which can get manipulated the most. So what IFRS 15 is trying to do is they are putting in a lot of safeguards at different stages that kuch bhi ho jaye, specifically prohibit the people or specifically prohibit businesses from overestimating their revenue at any stage. So they are over cautious and they don't allow you to recognize the revenue. Okay. खुशी, आप तो दिसंबर में लिख रहे हो ना?
यस सर।
ओके, और आप अभी अटेंड कर रहे हो?
हाँ सर, रिविजन के लिए। हाँ जी।
ओके.
हम्म।
Anybody else who's writing in December here? Okay. Sure. Now, the second aspect in transaction price is your significant financing component. Now, if you look at IFRS 15 properly, IFRS 15 has an insignificant financing component, then there is a significant financing component. Apne syllabus mein we only have significant financing component. Basically, think about a situation. Okay, you come to me and you say that Satyamit, I want to join ACCA coaching with you, and you ask me what is the total fees. I tell you, listen, the total fees is 2 lakhs. If you pay it cash down right now, if you pay the entire amount right now, you will have to pay 2 lakh rupees. And you tell me that, listen, I don't have so much money right now. So you go to the bank, Himanshu goes to the bank, he borrows money from the bank, he borrows 2 lakh rupees from the bank, pays 2 lakh to me, and then he returns that 2 lakh rupees to bank later along with interest. Now I am a businessman and I realize that, yeah, there is an opportunity to make money here. How is there an opportunity to make money? Himanshu, after coming to me, when he realized that the fees were high, he went to the bank and he asked the bank to give him a loan. Why don't I give him a similar facility? Why don't I say ki Himanshu, don't pay today. Instead of paying today, you pay 1 year from now, but instead of 2 lakhs that you pay today, you will have to pay 2,20,000 in the future. So if you pay the money today, you pay 2 lakh rupees. If you pay the amount after 1 year, you will have to pay 2,20,000 rupees. Now it's not as if in 1 year my service is changing or I'm delivering something else above from the promised service. I'm delivering the same item to him. मैं उसको वही चीज दे रहा हूं that I had promised, which is the entire ACCA coaching. So it's not as if my service has changed, but I am giving Himanshu the facility of delaying the payment. So in a way, I am acting like a bank to Himanshu. The 2,20,000 that I am charging him, out of that 2 lakh rupees is for my main business service, but the additional 20,000 is for giving him a facility to delay the payment by 1 year. So this additional 20,000 that I charged from Himanshu, I cannot call it my revenue because giving financing facilities to customers is not my main business. My main business is providing ACCA coaching. So for that, whatever money I get, that should be my revenue. So 2 lakh rupees is my revenue, and the 20,000 extra that I charged from Himanshu, that additional 20,000 is my finance income. So whenever a question mentions about significant financing component, this is what they are trying to say. Another point that you should keep in mind is that if a question mentions that the transaction price of 2,20,000 will be paid after 1 year, record the accounting entry for revenue today. What you will do is you will record an entry, customer account debit 2,20,000 to revenue to finance income. Finance income you should not recognize immediately. You should recognize that amount after the end of 1 year, or you could recognize it on a month basis. But the point that I'm trying to make is the 2,20,000 total amount that you are charging from the customer, out of that 2 lakh is for your main commodity or service. 20,000 is for the facility of delaying the payment, which is basically you are acting like a bank in this situation, and that 20,000 therefore becomes your finance income. Now, whenever consideration receivable in the future is given to you, calculate the present value of that amount. The present value is your revenue. The differential amount between the present value and the total consideration, that is your finance income. Now, we also know why this is called finance income. I'm sure all of you already knew this provision, but the intention of the revision is to jog your memory once again. ठीक है, चलो एक बार read the example. It's just carry forward of what we spoke about. Tell me once you have finished. If you have any questions, please let me know. Done? Okay. Now, any questions by the way? Nothing? You're all with me?
So,
Yes, sir.
Okay.
Yes, sir.
Chalo. Now let's talk about non-cash consideration. This is one of the easiest things. See, if there is any non-cash consideration, it is measured at the fair value on the transaction date, not on the reporting date, but on the transaction date. There is a question on this DigiWire company. DigiWire company mein there is a non-cash consideration, if you remember, and that non-cash consideration is in the form of shares. And how do you recognize the amount of revenue? Revenue amount is recognized with reference to fair value on the transaction date. Okay, not on the reporting date. Now, consideration payable to customer, the rule is simple. If consideration is paid to a customer in exchange for a distinct commodity or service, then it should be accounted for as a purchase transaction. If consideration paid to a customer is not in exchange for a distinct commodity or service, an entity should account for it as a reduction of the transaction price. Now, think about a situation that I am a baker, okay, uh, and I'm baking cakes. I have a bakery, but I'm a very lazy person. Mayank places an order with me for a big cake, and the total transaction price is 10,000 rupees. But I'm so tired that I tell Mayank, ki, bhai, why don't you only bring all the ingredients for me? So he goes to the shop, he purchases the ingredients as per the list I have given him, and he comes and he delivers those ingredients for 3,000 rupees to me. Now, the see, I have to collect 10,000 from Mayank when I deliver the cake to him, but Mayank got me the ingredients, so I have to pay him 3,000 rupees for the ingredients that he delivered. Okay, now the amount of consideration payable to customer is for a distinct commodity or service. Here, there is a distinct commodity or service called the raw material. This transaction should be accounted for as a purchase transaction. But if the amount payable to the customer is not for a distinct commodity or service, then that amount should be adjusted. It should not be shown as purchase separately. It should be adjusted as a reduction from the transaction price. Now, when you go to a Bata store for buying shoes or whatever, they keep on crediting points to your name. And when you have accumulated sufficient points, you can go to the Bata store and maybe, you have accumulated some 1,000 points. You can get those points redeemed, and after that, what will happen? They will reduce the total purchase price from the next billing that they are going to do. Now, I have purchased goods worth 10,000 from Bata today, and they had to pay me 1,000 rupees as loyalty points for the past purchases that I had done from them. So the amount payable to Satyamed, which is 1,000, is not against a distinct commodity or service. So in this case, it should be shown as an adjustment or a reduction from the transaction price. Like how you get cashbacks and all of that, that is also a reduction from the transaction price, not shown as a separate purchase transaction. Now, the step after this, which is the fourth step, is about the allocation of transaction price. The total transaction price should be allocated to each performance obligation in proportion to the stand-alone selling prices. Okay. Now, the best evidence of stand-alone selling price is the observable price when the goods or services are sold separately. Now, think of a situation that you come to me and you say, Satyamed, I want to join your SBR coaching, or I want to join your AFM batch. What are the fees? I tell you that the total fees for the batch is 24,000. You're like, okay. Then you ask me what all is included. I tell you that coaching is included. Okay. Then test series is included and counseling is included. And because you are a typical Indian customer, you start asking me all types of questions. Iska kitna, uska kitna, uska kitna, all questions you are asking me. Then I tell you, listen, coaching by itself, if you go for just the coaching, you have to pay 20,000. If you go for just the test series, you have to pay 6,000. If you go for only counseling, you have to pay 4,000. And you know how most educational institutes will tell you stories. Arey sir, sirf aapke liye I'm giving you a discount. If you buy all of these three together, you don't have to pay 30,000. You have to pay only 24,000. So the coaching institute is going to collect 24,000 from you. Now the question is, how should this 24,000 be split between these three? It has to be 24,000, which is transaction price, should be split between the three performance obligations in ratio of their standalone selling price. So how will you do that? How will you split 24,000? Let's see. What's the total? The total is 30. So the 24,000 consideration has to be split between these three in the ratio of their standalone selling prices. Okay. So 24,000 into 20 upon 30. So see the total amount of 24,000 was split between transaction prices in the ratio of their standalone selling price. So 24,000 was split in this way. Now understand, if you are standing at the so the batch is complete. My teaching is complete on 31st of March. I can recognize 16,000 of revenue. By 30th of April, the test series is done. Then I can recognize 4,800 of revenue. And after that, I provide counseling to the student. Then I can recognize the 3,200 worth of revenue. Now, when coaching institutes tell you that, listen, the amount that you have paid us is non-refundable, let's not get into whether this is right legally or not, but you have to understand, even if the amount is not non-refundable, the entity cannot recognize that as revenue unless they have performed their part of the service, unless they have done their provision of service or completion of the promise that was given by them. जब तक वो नहीं होता, unless and until that happens, the amount of revenue cannot be recognized, because it's critical that you complete the performance obligation. If you don't complete the performance obligation, you cannot recognize revenue. Step 5, जिस पे maximum number of questions are often framed, is when to recognize the revenue. Should the revenue be recognized over a period of time, or should it be recognized at a point in time? See, customer payment, physical delivery of goods is not the trigger point for revenue recognition, even if the amount is non-refundable. So the first thing that you try to check is the performance obligation satisfied over a period of time, or is it satisfied at a point in time? अब how do you decide over a period of time? Means एक moment पे complete नहीं होता है. It takes a period of time for the promise to get completed. There are three situations under which you can say that the performance obligation is satisfied over a period of time. First one, the customer simultaneously receives and consumes the benefits provided by the entity's performance as the entity performs. I am teaching you, I am providing the service, the seller is providing the service, and you are simultaneously consuming the service that I am providing. Then you can say that the performance obligation is satisfied over a period of time. The entity's performance creates or enhances an asset that the customer controls as the asset is created or enhanced. I'm constructing a building for you, and as each floor gets completed, you gain control of that particular floor. That clause is covered here. In some questions, you might have a situation where the entity does not get control of that particular building unless the entire building is completed. That is how the contract is worded. In that case, the performance obligation will be satisfied at a point in time. And third situation is the entity's performance does not create an asset with an alternative use to the entity, and the entity has an enforceable right to payment for performance completed to date. So I am the seller. Say I'm making customized furniture for you. When I'm making customized furniture, it is as per your specifications, your specific requirements. That means this piece of furniture that I'm creating, I have no alternative use for it. Nobody else is going to buy it. Only you are going to buy it from me, which means it does not create an asset with an alternative use. Uska koi alternative use is not possible. And the entity has an enforceable right to payment for performance completed to date, which means जितना काम मैंने किया, whatever work I have done, say I have done 40% of the work, I have the right to claim that particular proportion of the fees from you. So if the entity's performance does not create an asset with an alternative use to the entity, basically whatever I'm making, whatever I'm preparing, only that customer can make use of it. There is no alternative use possible. And however much work I have completed, I have the authority to claim that particular amount from you for the proportion of work that is done. If one of these three conditions is fulfilled, then you say that the performance obligation is satisfied over a period of time. Now, if a performance obligation is not satisfied over a period of time, if none of these three conditions gets fulfilled, then you will have to check whether a performance obligation is satisfied at a point in time. If it is not fulfilled over a period of time, then naturally it will be fulfilled at a point in time. At a point in time, matlab in your entire journey, there will come that one moment at which you can say that the sale is complete. And when do you say that the sale is complete? When the control of the commodity passes on to the customer. When will you say that the control of the commodity or the control of that item passes on to the customer? Understand that for this, you should know what the word control means. Control means the ability to direct the activities of the other entity. Now, I can tell you what to study. I can tell Garvit what to study. Maybe what I say has an influence on him, but he's not going to listen to every word that I say. When I say I have control, that means I have the ability to tell you what to do and what not to do, and you have no choice but to listen to what I have to say. That is control, ability to direct the use of a particular item. Now imagine that the goods have been delivered to you, but the legal title has not yet been transferred. That means the transfer of control has not taken place. Or I have collected cash from you, but the physical custody of the commodity has not gone to you. Again, the transfer of control hasn't really happened. Transfer of control is that point in time where you say, ki, okay, I have finished my job, and now the other party gets the ability to decide how to use this particular item. That point is the point of transfer of control. Now, there are 5 indicators for transfer of control. The entity has a present right to the payment for the asset. Present right to payment means now, after I have sold the goods to you, I am not giving you a choice. I have all the rights in the world to collect the payment from you. Present right to payment means you don't have a choice apart from paying. तुमको देना ही पड़ेगा. That is present right to payment. Then customer has the legal title to the asset. That means on paper, on the registered document, it is in the person's name. Then entity has transferred physical possession of the asset. Customer has significant risk and reward of ownership. Now, sometimes, when goods are sent from one location to another, ठीक है? Now, there are different Incoterms or different shipping terms that are established. One shipping term could be, okay, listen, I am shipping the goods from my location to Karthik's location, okay, and I am putting them on board a ship. And the moment they are onboarded on the ship, then the risk relating to the goods passes on to Karthik, which means if the ship sinks or there is a storm and the goods get destroyed, that is going to be his headache, that is going to be his liability. So in this case, the risk of ownership has passed on to Karthik because the contract specifically mentioned that the moment these goods are onboarded the ship, then the risks pass on to the customer. But if the contract is worded in such a way that even when the goods are onboarded the ship, the risk still remains with the seller only. Okay. The risk still remains with me. It has not passed on to Karthik at this point. When will it pass on to Karthik? When the goods are physically delivered in his hands. So in this case, although the goods are onboarded the ship, the control is still in my hands because the significant risk and reward of ownership are still with me. So this is how you will have to decide here. Ultimately, if something goes wrong, who will bear the loss? That person has control over the asset. Okay, and the customer has accepted the asset. Customer has accepted the asset means Customer has given, he has nodded, he has given his acknowledgement कि नहीं ये बराबर है. I am checking it and I am accepting the item, which means now the control has passed on to the customer. Now in your examination questions, don't see, एक तो ना IFRS 15 has not specified कि out of 5 all 5 should be fulfilled या out of 5 minimum 3 should be fulfilled. They have not mentioned anything else. What they are trying to say is see if the control of the goods has passed on to the customer. When will you say that the control of goods has passed on to the customer? When one of these conditions have been fulfilled. तब जाके revenue recognize करो. Otherwise, do not recognize any revenue. These are the 5 steps in the, not 5 steps, I would say. These are 5 indicators of transfer of control. Okay. So the moment the transfer of control takes place, then you can say that the sale is complete and you can recognize that particular amount as revenue in your books of accounts. Okay. Are you all with me?
Yes, sir.
Yes, sir.
Yes, sir.
Yes,
Yes,
sir.
sir.
Okay. Chalo. Guys, I need a 5-6 minutes ka break. So let's take a quick break. I'll be back and then we'll continue with consignment sales and futures options and all of that. ठीक है? 5 मिनट दो मुझे. Chalo guys, come back. Cool. So, having finished the 5 steps of revenue recognition, there are certain special transactions in IFRS 15 that we need to be aware of. Now, what are these special transactions? I'll show you the study hub as in what all do they include, and all of those have been discussed in the class. We'll be discussing them once again just for your reference. ये देखो. The application guidance and illustrative examples of IFRS 15 include warranty, customer options for additional goods and services, customers' unexercised rights, non-refundable upfront fees, licensing, non-refundable fees का हमने discuss किया था अभी. Then principal and agent transaction, consignment transaction, repurchase we have done in the class. We'll repeat it once. Bill and hold arrangement, we have done this in the class. ये सारा कुछ हमने देखा है. एक बार इसका क्विक रिवीजन कर लेते हैं. Let's understand what these concepts actually stand for. Okay. Now a consignment sale is a special situation where say say I am the maker of crockery. Okay, crockery is expensive. Now I don't have so many retail outlets in the country. So there are different home centers and different retail outlets owned by different people. So what I do is I send them this package of cups, package of crockery to them. And what I tell them is, listen, you hold it in your store, you sell it to the customer, and when do you pay me? You don't pay me when I give the goods to you. You pay me when you sell the goods to the final customer. Now, in this case, that other individual who is selling the goods on my behalf, he is primarily my agent. Why is he my agent? Because he is selling the goods that I have manufactured as per the instructions that I have given him. Okay, sometimes an entity delivers its product to a dealer or a distributor, and then the dealer will make the sale to the end consumer. The terms and conditions associated with the transaction between the first entity and the dealer must be assessed to determine whether a sale has occurred. Now, Karthik has a retail store in Gurgaon and I am staying in Noida and I want him to sell my products in his specific locality. So I send a consignment of 100 crockery sets to him. But he doesn't have to pay me for the crockery set. I have the right to recall the crockery sets at any point in time. If he is unable to sell the goods, he has the right to return the crockery sets to me at any point in time. तो ना उसको मुझे, he is not obligated to pay me unless and until he has sold the goods to the final customer. He has an obligation to pay me only when the final customer purchases goods from him and he has collected cash from the final customer. So the dealer has no unconditional obligation to pay. Karthik has no unconditional obligation to pay unless he has sold the goods to the external third party. This is a consignment situation where the product is controlled by the entity until a specified event happens. So I am the principal seller. The commodity is controlled by me. Controlled by me means if I believe that array Karthik is not able to achieve his target, I can say Karthik chalo goods wapas karo. He returns the goods to me, and I have the right to recall the goods at any point in time. Similarly, he also has the right to return the goods to me if he feels कि यार नहीं यार इसके sale में मजा नहीं आ रहा है, I'm not able to make the sale, so he can return the goods to me. And the dealer has no unconditional right, has no unconditional obligation to pay for the product. So Karthik will have an unconditional obligation to pay only when he has sold the goods to the final customer. Tab tak he does not have the unconditional obligation to pay. This is the situation of consignment sale. इस पे रूबुल कंपनी वाला जो क्वेश्चन है ना एग्जाम किट का, रूबुल कंपनी इज ऑन दिस टॉपिक. ठीक है. For those who want an idea ki which question relates to which topic, I am telling you, pay attention to that. The others we have done Rubul company in class. किया है ना Garvit?
Yes, sir.
So others make a note. Rubul company, I think question 35 या 36 है in the exam kit, that is on consignment sale. Okay. Now there is a special type of transaction called futures and options. अब यहाँ पे ना futures and options are not tested or discussed in the same level of detail in which they are discussed in AFM. I'll just give you a basic understanding of what futures and options are, and then all you have to do is you have to refer to these flowcharts. You follow these flowcharts and you will always get your answer right. Now, we could have a situation of sale and repurchase where I sell the goods to the other party and I have a right or I have an obligation. Let's consider the first situation where I sell the goods to Aishwarya, and after 3 years, I have an obligation to repurchase the goods from Aishwarya. Okay. What is the situation? I have the right to sell the goods to Aishwarya, and so I am selling the goods to Aishwarya right now, and after 2 years, I have an obligation मतलब there is a compulsion on me कि यार 3 साल के बाद I have to repurchase the goods from Aishwarya. That is a forward contract that today on 27th of August I have sold the goods to Aishwarya, but I have the right or I have a compulsion to repurchase the goods from Aishwarya after 3 years. That is the first situation. Second situation could be I have sold goods to Aishwarya today at 50,000. After 2 years, I have the right slash I have the option to repurchase the goods from her at a certain fixed price. Okay. So after 2 years, if the market price of the commodity is 30,000 and I have the right to repurchase the goods from Aishwarya for 20,000, then I will exercise the option. Otherwise, I will let the option lapse. What is an option? An option is a right, but not a compulsion. So I sell goods to Trisha and then I have an option. Matlab, mere man, it depends on me whether I want to repurchase the goods from her. If the market price is higher and the repurchase price is lower, I will end up purchasing the goods from Trisha. If the market price is 30,000 and the repurchase price is fixed at uh, say 50,000, then in that case, I will not be exercising the option and I will let the option lapse. And a third situation could be that I have sold goods to Trisha and Trisha has the right to sell the goods back to me after 2 years. Okay, I have sold the goods to Trisha and then Trisha has the right to sell the goods back to me. That is the third situation. Teen situations we can have in the paper. Situation one, I sell the goods to Trisha and I have an obligation or a compulsion to repurchase the goods from Trisha after 3 years. 3 साल के बाद I have no choice but to repurchase the goods from her. Second situation could be I have sold the goods to Trisha, but I have an option to repurchase the goods from her after 3 years. It depends on me. Mera discretion hai. If I want, I can buy it back. If I don't want, I will not buy it back. Third situation is I have sold the goods to Trisha and Trisha has an option to sell it back to me. If she wants, she can sell it back to me. If she doesn't want, she won't. But if Trisha decides to exercise the option to sell the goods back to me, then I have no choice but to buy the goods back from her. How many of you are aware of the accounting treatment in each of these? Raise your hands. आवाज आ रहा है ना मेरा? Mayank, do you know the accounting treatment in each of these?
Yes, sir, I think so.
Himanshu?
Yes, sir. Hello, sir. Am I audible?
Yes, you are.
Yes, sir.
Garvit, do you remember the accounting treatment in each of the
Yes, sir.
situations? Okay. Biranchi, sir, do you remember the accounting treatment?
Yes, sir.
Okay. Ankita?
Yes, sir.
Okay. So tell me in the first, चलो अभी ये tell me वाला time है नहीं अपने पास. I'll only walk you through the three situations. Okay. Entity sells goods and has an obligation to repurchase, मतलब compulsion to repurchase. या फिर entity sells the goods and has the right to repurchase and it is probable that the right will be exercised. If entity has sold the goods to a third party and it has an obligation to repurchase, then it is called then in that is the first situation. Obligation to repurchase means compulsion to repurchase. या फिर entity has sold the goods to a third party and it has the right to repurchase the goods from the third party and it is probable that the right will be exercised, then the transaction is not accounted for as a sale. Is the repurchase price greater than the original selling price? If the answer is yes, repurchase price is greater than the original selling price, treat this as a financing arrangement. Is the repurchase price greater than the original selling price? If the answer to this is no, then treat it as a lease. Similarly, the second situation is entity sells goods and entity has an obligation to repurchase only if requested by the customer. That means customer has the option. I sold goods to Trisha and Trisha has an option to sell the goods back to me. Okay, I have sold the goods to Trisha and Trisha has an option to sell the goods back to me. Is it probable that the customer will sell back to us? If the answer is yes, then check, is repurchase price greater than the original selling price? If the answer is yes, treat this as a financing arrangement. Is repurchase price greater than the original selling price? If the answer to this is no, treat this as a lease. And you have sold goods to the customer and you have an obligation to repurchase only if requested by the customer. And then you check, is it probable that the customer will sell back to us? If the answer to this question is no, then account for the contract as if it were a sale with a right to return. ठीक है, right to return वाला part we have discussed just now. इस पे ना there is an exam kit question and I'm not able to recollect which exam kit.
Jacinta coach.
Jacinta is on this one, na?
Yes, sir.
Yes, sir.
Because it happens in every batch, but I was not able to recollect which one. So guys, Jacinta company section B का question है. It is specifically based on this. ठीक है? And you will get the flow chart, so don't worry. So you will get the entire Excel sheet from me. Now, let's talk about a separate situation called bill and hold. A bill and hold arrangement is a contract under which an entity bills a customer for a product, but the entity retains physical possession of the product until it is transferred to the customer at a point of time in the future. For this to be recognized within revenue, the customer must have obtained control of the product despite it physically remaining with the entity. The one example that I gave you in class was I am on my way to the airport. ठीक है, और मैंने आपका बैच खत्म किया and I am flying out of Delhi. So on my way to the airport, I look at a shop and it is selling TVs. I walk into the shop and I say, I want to buy this TV. The seller says, yes, take it home. I'm like, yes, I will pay you, but I can't take it home right now because I have a flight. So you will have to keep it with you. When I come back from my trip, I will take the TV from you and I will take it home. The seller says, yes, fine, no problem. So the seller in this case, he identifies, I have identified a specific TV. I have put a sticker on that, or the seller has put a sticker on that TV selling sold or something on those lines. So the arrangement has been requested by the customer. The product is identified as belonging to the customer by putting a mark or a sticker on it. It must be ready for physical transfer and the entity cannot have the ability to use or sell the product. The entity can use it or sell it only if the entity cannot sell it to anyone else. It can only be taken by me. So this is a bill and hold arrangement in IFRS 15. So I should account for sale, although the physical custody of this particular item has not passed on to the customer. ठीक है, physical custody has not passed on to the customer, it is still with me, but the transfer of control has taken place, it is identified as belonging to me, so I should consider that amount in my revenue. Now, there is one part in IFRS 15 that has been added recently, which is about crowdfunding. ठीक है, पहले crowdfunding का एक technical article था. Now they have included that in the study hub itself. So it's a छोटा सा 5 minute का discussion. Please pay attention. Now, when we talk of crowdfunding, I'm sure when you start browsing online, you start getting these ads that there is a child suffering from cancer and his parents don't have money. So they ask people to contribute, or he has some heart disease or kuch aisa hota hai. And then even if everybody contributes thousand rupees and 100 such people contribute, you would have accumulated a good amount for the surgery of the child, and then the child is saved. This, I'm sure you have seen these advertisements at some point of time or the other. So this approach to raising money is called crowdfunding. Okay, and it has been specifically included under IFRS 15. Crowdfunding, under this discussion, not everything under this topic is revenue, but they have included that. So let's have a look at it. Crowdfunding is the funding of a new startup or a project by collecting cash from a variety of individuals or entities, often via the internet. There are four common ways of raising funds. Equity based is targeted at investors who receive shares in the new company. An issue of capital falls within the scope of IAS 32 financial instruments. So, see, this is in a way a very informal approach to doing initial public offer. IPO करने का ये it is a very informal way of going in for an initial public offer. Debt based. A contributor makes a loan to a business that is looking to crowdfund with the intention of subsequent repayment of interest. It is considered as debt. You have raised money from people, you will return the money to them. Reward based involves promising specific items before the launch of a new project, product, or service, generally targeted at contributors who want to own a new product. IFRS 15 should be used to determine when to recognize revenue. Donation based. Contributors make donations to a project or company and may receive rewards in return. Some forms have no rewards, that is, donors merely wish to contribute to a particular cause, like tree plantation or ये सब pollution उस सब के लिए. If a crowdfunding campaign involves the issue of rewards, the entity will need to determine whether each performance obligation is satisfied over time. If one or more of the IFRS 15 criteria are met, revenue should be recognized over time. If none of the criteria is met, control transfers to the contributor at a point in time and revenue should be recognized at that point in time. अब crowdfunding के केस में how can a revenue वाला situation arise? Think of a case where there is a company, it undertakes a crowdfunding campaign to finance the production of a electric scooter, for example, or some device like that. Now the company has made a short film promoting the eco-friendly qualities of that particular vehicle, and it has posted it on the crowdfunding platform. Just say India mein na, there is a crowdfunding platform called Keto. KETTO. So company has posted the campaign on that. Now the campaign raised a 3 million amount on which the funding platform charged you a 5% commission. The contributors to that crowdfunding campaign were promised a reward of one free goes of this specific electric scooter for every $3,000 distributed. At the financial year, and let me take this example from the study hub. One moment. These are, those chota last minute things that can actually turn your exam score in a completely different direction, because most people will not look at these points. ठीक है. At the end of the financial year, Smith Company had manufactured only 50 Freego scooters at a total cost of 180, but none had been delivered to customers. There are some doubts whether the company is capable of developing, manufacturing, and delivering the scooters promised, but Smith Company is sure that the funding will recover any cost incurred. Discuss the accounting treatment of the funds raised and the costs associated with the campaign for the year ended 30th of June 2009. Please use the notes feature in the toolbar, whatever. As this is a reward-based crowdfunding where contributors are customers, IFRS 15 revenue from contract with customers should be used to determine whether when to recognize the revenue. At 30th June 2019, it is difficult to know that what the outcome will be as only 50 scooters have been manufactured out of a promised 1000 scooters. They thought they will be able to make 1000 scooters, but they have made only 50 scooters so far. Okay. And there are doubts whether the company can deliver on the scooters promised. However, because control of the scooters has not yet transferred to the contributors and the performance obligation is satisfied at a point in time on delivery, Smith Company should not recognize any revenue at 30th of June 2009. Costs incurred before transfer of control of the scooter are recognized as inventory and not expensed or matched with revenue at this point. The balance of crowdfunding amount received net of commission will be presented as a contract liability. Now, to make things simple, what they have said is that contributors to the crowdfunding campaign were promised a reward of one free go scooter for every $3,000 distributed. So, what is this situation? This situation is that a company wanted to make electrical or some environmental friendly scooters. So उन्होंने क्या किया? They raised the money from the customers only कि we'll make an eco-friendly scooter, but we are raising money from you. And once we make the scooters, once the commercial production starts and we start delivering it to customers, then for every $3,000 of amount received, every contributor will get one scooter. But at this point where you are standing, it seems very difficult whether the production of the scooters will happen on a commercial basis or not. The company very clearly has doubts about the capability of developing, manufacturing, and delivering the scooters promised. But Smith Company is sure that the funding will cover any cost incurred. उनको cost recover करने का probability है. They are very confident of that, but they are not confident of how many future sales will the scooters be able to generate. So at this point in time, there is material uncertainty over the ability to make more sales and to recover the revenue or to recover the amounts and therefore distribute free scooter to the customers. So in this case, you should not recognize it as revenue. The contributors to the crowdfunding campaign were promised a reward of one free go scooter for every $3,000 contributed. People gave you money to start to do the research and development work, and then you had to give them one scooter for every $3,000 distributed. But utne scooters bane ही नहीं है, and it seems difficult whether that target will be achieved or not, which is why unless and until you are able to deliver and complete the performance obligation, you should not recognize revenue. Now, chances of something so intense being tested on crowdfunding, uska chance thoda kam hai, so don't worry too much about it. But just in case a question comes, all you have to check, all you have to verify is whether the business entity was able to fulfill the performance obligations under the contract. If it was able to fulfill performance obligations, or it is likely that in the future it will be able to fulfill performance obligations under the contract, in that situation you can recognize revenue. Otherwise, don't recognize revenue, which is very clearly mentioned in the standard. अब एक और बात, in the question na, you have to be a little more careful when questions like these are asked, because here it's not given to you very specifically ki what is the probability of you actually making the sale in the future, वो दिया नहीं है. So you will have to pick out certain words कि there is a remote possibility या जो भी है, ठीक है. So you will have to be a little careful about that one. अब For people who studied SBR in the last attempt, there was a topic called modification of contract. Abhi, that topic has been removed. But just to be on the safer side, जैसे आप study hub में देखेंगे तो अभी that topic is not there on the study hub. But I just feel I am a little skeptical about these things कि यार अगर कुछ removed syllabus में से भी पेपर में आ गया तो so I feel कि यार एक बार I will discuss that special situation with you in brief. एकदम brief में discuss करूंगा because वो syllabus में से हटा दिया है. If you check the ACCA study hub ना वहां पे these transactions, that is modification of contract, is not there. But एक बार कर लेंगे because I don't trust anyone in this department. अगर पिछला कुछ उन्होंने डिस्कस कर लिया ना तो unnecessary आपको प्रॉब्लम हो जाएगा. ठीक है? Are you all with me?
Yes, sir.
Yes, sir.
Okay.
Yes.
Yes, sir.
Now, let's have a quick discussion on certain transaction types that can be tested in the paper. एक मतलब ऐसे ना, these are common sense based transactions. Okay, common sense वाले कुछ कुछ transactions है जो बहुत frequently नहीं आते हैं पेपर में, but see, even if you haven't studied it as a separate topic ना, I'm quite sure you will be able to answer. But chance क्यों लेना ना, जब अभी अपने पास time है तो we might as well do that properly. Okay, now there is something known as customers unexercised rights. ठीक है, a non-refundable prepayment, example for a hotel room or a flight booking, gives the customer a right to receive a good or a service in the future. Okay, but sometimes customers may not exercise their rights, and that is referred to as breakage. What is it called? It is called breakage. Now, if the customer does not exercise all the contractual rights, the breakage amount is recognized as revenue unless there is a requirement to remit it to another party. ठीक है? If entitlement to the breakage amount is expected, it is recognized as revenue in proportion to the rights recognized, in proportion to the pattern of rights recognized by the customer. And if entitlement is not expected, the breakage amount is recognized as revenue when the likelihood of the exercise of customers' rights become remote. अब ये ना बहुत बड़े बड़े वर्ड्स इन लोगों ने यूज किए हैं, कस्टमर्स, अनएक्सरसाइज्ड राइट्स, ब्रेकेज एंड ऑल ऑफ दैट. आई विल simplify it in language that you guys can understand. Suppose I book a ticket to Dubai. ठीक है, मैंने एक दुबई का टिकट बना लिया कि I have to fly. Now, what I have done is, there are these flexi tickets that are available. What are flexi tickets? You pay a certain additional amount, you pay 1,000 rupees, and then you can change your date of booking. Okay, so if I was supposed to fly out on the 1st of September, and for some reason I'm not able to fly out on the 1st of September, then I have a right that just say maybe 4 hours before the flight takes off, I can make changes to the booking and I can defer my flight to the next month. Okay, so this is known as unexercised right, which is also called as breakage. If the customer does not exercise all the contractual rights, the breakage amount is recognized as revenue unless there is a requirement to remit it to another party. If entitlement to the breakage amount is expected, it is recognized in proportion to the pattern of rights exercised by the customer, and if it is not expected, then breakage amount is recognized as revenue when the likelihood that the exercise of the customer's rights becomes remote. What do we mean here? Please understand. Suppose you're talking about a flight or a hotel booking, and you are given say for example, I was supposed to fly out on the 1st of September. Okay, my flight took off and I did not board the flight. So 24 hours after the flight takes off, I have the facility to reschedule my booking to another date. Now, I do not exercise this special provision given to me to reschedule my booking to a particular date. I don't exercise this right. So in this case, what happens? In this case, Now the company does not have any obligation to give me another seat on a different flight. If I were to exercise the right to reschedule the flight within the 24 hours after the departure of my original flight, then if I were to exercise that option, then the airline company like Indigo would be obligated to give me a seat on another flight. But in this case, I did not use the time in the exercise window to book another flight. So now the company is not obligated to give me anything. And because now it is not obligated to pay me to give me a seat on another flight, it can recognize that entire amount as revenue. But if it so happens that in that specific duration of time within the 24 hours, I reschedule the flight. ठीक है, मैंने फ्लाइट रीस्केड्यूल कर दिया, I move it to another date, then in that case the business entity, that is Indigo, that company will now recognize the revenue only when I board the second flight. Maybe they have a feature which says that you can reschedule the flight only once. So if I reschedule the flight and then second time job when I was supposed to fly, I still did not board the flight, then in that situation they will recognize the entire amount as revenue. ठीक है, अब we could also have a situation of non-refundable upfront fees. ये हमने we have not discussed it as a special transaction, but we have discussed it on multiple occasions. A non-refundable upfront fee that relates to a transfer of a promised good or service should be evaluated to determine whether the goods or service is whether to account for the good or service as a separate performance obligation. If it is an advance payment for future goods and services, it should be recognized when the future goods and services are provided. If it is just a non-refundable fee and you have not provided the services to the customer, then in that case, what will happen? Unless and until you provide service to the customer, that amount will lie in your other current liabilities या other liabilities. वो उधर पड़ा रहेगा, but you cannot recognize revenue because you have technically not sold the goods or services to the customer, or rather you have not completed your obligation under the contract. ठीक है? Are you all with me?
Yes, sir.
Yes, sir.
Yes,
Yes,
sir.
sir.
So these are some special transactions that might be tested in your exam. ओके, मॉडिफिकेशन ऑफ कॉन्ट्रैक्ट जो है वो आपके सिलेबस में से हटा दिया है. सो आई विल क्विकली डिस्कस इट जस्ट टू गिव यू अ जिस्ट, बट अभी वो सिलेबस में नहीं है. इफ यू चेक द वेबसाइट देन इट इज नॉट देयर इन द सिलेबस एनी मोर. अब स्टडी हब चेक करना फॉर दिस. Where are we? Yes, we are on contract modification. A contract modification is a change in the scope or price of a contract. The modification is accounted for as a separate contract if the scope of the contract increases because of the addition of distinct goods or service, and the price increases by an amount which is reflective of the standalone selling prices of the additional goods or service. Ankita entered into a contract with me to study SBR for 20,000. Then after 2 days of attending my SBR class, she is like, AFM भी इसी के पास कर लेती हूँ. So she says, Satyamed, I want to join the AFM class. I tell her, Ankita, the fees are 20,000. Now, the scope of the contract increases because of the addition of the distinct service, yes, and the price increases by an amount that reflects the standalone selling price of the original goods or services, of the additional goods or services. Earlier, the contract price was 20, now the contract price is 40. The contract price increased by how much? It increased by 20,000, which is reflective of the standalone selling price of the AFM class. मतलब अगर कोई individual आके सिर्फ AFM के लिए join करता, so I would have to pay 20, so that person would have to pay 20,000 to me. How much did I charge Ankita for this additional service? I charged her 20,000. So this is a separate contract. This addition to the contract or modification should be treated as a separate contract. ठीक है, एक बार ये देख लो example. Just go through it once. I'll increase the size. अच्छे से पढ़ो इसको. Yes, Trisha.
Sir, we do have lease modification, right? Only the contract modification part is renewed.
रेवेन्यू वाला है, ये वो वाला नहीं है. मॉडिफिकेशन ऑफ लीज टर्म्स इज अ सेपरेट थिंग, वो अलग है, ये अलग है.
Okay, sir. And sir, जो आपने पहले नॉन रिफंडेबल वाला करवाया पार्ट, they can even relate with the IS 37 wala, the obligation part, right? Like a question can come. Yes, sir.
पॉसिबल. ठीक है, देख लिया. ओके. If not accounted for as a separate contract, the modification will be accounted for as the termination of the existing contract and a creation of the new contract if the remaining goods are distinct from those transferred before the modification. The transaction price of this new contract is the total of original consideration unrecognized and additional consideration promised from the modification. Okay, let's look at this situation. Chroma entered into a contract to sell 100 iPhone 14 to a customer. Each iPhone 14 was priced at 50,000. Chroma had delivered 80 iPhone 14 to the customer, each for 50. Before Chroma could deliver the remaining 20 iPhone 14, the customer came back to Chroma and placed an order for 50 iPhone 15. Okay, each iPhone 15 is for 60,000. Now, customer wants Chroma to deliver the iPhone 15 to his doorstep and also pay for transit and insurance. Chroma added this clause and customer requested that this facility be also extended to the 20 iPhone 14s not yet delivered. With new terms, this is like a new contract. A part of the original contract has not yet been fulfilled and change in terms happened before that requirement could be fulfilled by Chroma. ये कैसा situation था? 100 total phones were to be delivered. 80 फोन्स ही डिलीवर हुए थे व्हेन आई रिक्वेस्टेड फॉर अ मॉडिफिकेशन की अभी जो रिमेनिंग 20 फोन्स दैट यू आर गोइंग टू सेंड उसमें प्लीज प्रोवाइड transit insurance and all of that. So now these 20 iPhone 14s that Chroma is transferring, these are distinct units, not the same as the 80 transferred before. वो जो 80 है उसके लिए अभी कुछ नहीं है. This is only for the additional 20 iPhone 14 that you have to, that was supposed to be delivered under the original contract, but now the terms and conditions to that have been modified. ठीक है. अब the iPhone 15 जो है वो अलग है and the 20 undelivered iPhone 14 जिसके लिए you are basically adding certain clauses in the contract, that is a separate distinct set of items altogether. So this arrangement is treated like a new contract and the fulfillment of the performance obligation is evaluated separately. So what they are trying to say is that don't, with for the 20 you have modified certain terms of delivery, right? You have now said ki ye 20 phones when you are delivering, you also have to give us when you are delivering these 20 phones to us, you also have to give us transit insurance and coverage and all of that. So don't mix it up with the old 80 that were delivered. Ye 20, treat it like a fresh contract and account for that as a separate contract altogether. And part of the original contract if the remaining goods and services are not distinct from those transferred before the modification and so form a part of a single performance obligation. This modification will impact the contract price and the stage of completion, but it is dealt with by adjusting the amount of cumulative revenue recognized at the modification date. What does this mean? Say, for example, Ankita entered into a contract with me to make furniture for her. Okay, and she had selected a particular and she had given me a design. I prepared the sofa set as per the design she gave me. And when I called her for inspection, she said, "नहीं यार, ये color देख के ना मजा नहीं आ रहा है. I'm not happy with the color. Can you change the cushions and can you change the color of the sofa?" I'm like, okay, if you are saying so, but additional work will need additional money. She's fine. I will pay additional money, but just make the sofa the way I want. I said, okay. So now, see, the original obligation was never complete. What was the original obligation? The original obligation was to give a sofa to Ankita that matches her specifications. Now, what I gave did not match her expectations or her requirements. So I had to rework this particular sofa. And which is why this is not considered as a separate contract, because the original performance obligation is not complete. You are just performing or delivering you are just answering a modification call. You are not delivering something new. That old thing only is not ready, which you were supposed to deliver. So this is treated as a modification of the contract and not as a separate contract. Just certain terms of the original contract have been modified. So people, that in short, or not in short, we started at 1:45. It's almost 3:47 now, removing the 10-minute break. Almost pura ka pura IFRS 15 we have completed in 110 minutes, 120 minutes at best. And while we were discussing, I did give you references to certain accounting standards. Certain question numbers. Jacinta company hai, Rubul company hai. IFRS 15, you will find it in a lot of questions in the paper. If we get the time, let's see if we can do some more questions together. I also wanted to do sustainability today, but revenue only took the entire 2 hours worth of time, but it's okay, because normally in a regular batch we take 10 hours to complete revenue, 9 to 10 hours. So naturally revision में 2 घंटा is not such a bad idea after all. So I will increase the number of sessions that I am doing with you guys. एक second रुको. Let me just have a look at my calendar. If I do get a free slot now, I will accommodate time for you. Friday evening, I don't have anything. Today is Wednesday, right? Not Thursday. Wednesday है ना आज?
Yes, sir.
हाँ.
Yes.
तो I think I have, एक बार चेक करो तो ग्रुप पे, आई एम नॉट ओपनिंग व्हाट्सएप, अदरवाइज कॉल्स आ जाएंगे. आज मतलब I have scheduled a class for Thursday, that is tomorrow, correct?
Yes, sir.
Have
Lease
I
and
have I given you any Friday and Saturday class?
Yes, sir. For
The Friday is
Friday,
supposed to be
Friday
consolidated.
Friday I have given you.
8
8
to
and
11:30
11:30 in morning.
a.m.
Okay. एक second, let me just update my. So I have given you Friday का. Saturday दिया है कुछ आपको?
No, sir.
No.
No, sir.
So we will have a slightly longer session on Friday, maybe 8:30 to 12 types कुछ मैं कर लूंगा. So whatever I feel is important and needs to be covered, I will take it up on Friday. And if I still feel कि यार Sunday session है, but I need a session on Saturday also with you guys, so I'll then schedule a Saturday session. So आज का जो sustainability I was supposed to do today, I will push it to tomorrow. In tomorrow's session, I'll take up sustainability with you. ठीक है, because it's an important topic.